In the next 5 chapters, I discuss 5 key steps that, I would argue, should be central to the way we handle money. There is a connection between money and happiness, but the relationship is far messier than most people imagine. If we want to get the most out of our dollars, we need to think much harder about how we spend and which goals we pursue. Most of us will live an amazingly long life that will often see us pursue more than one career and spend perhaps 20 or 30 years in retirement. That has big implications for how we handle our finances. Thanks to the instincts we inherited from our hunter-gatherer ancestors, we are hardwired to fail both as savers and as investors. Result? It takes great self-discipline, or in the absence of self-discipline, a certain amount of self-deception, to manage money successfully. We divvy up our financial life into a series of buckets, thinking of our insurance policies as separate from our bank accounts and our stock-bond investment mix as unrelated to our debts. But to manage money prudently and make the right trade-offs, we need to bring together all these financial pieces, and the central organizing principle should be our paycheck, or lack thereof. To get ahead financially, we should think less about making our money grow and more about the dangers that could derail our financial future. This doesn't mean we shouldn't take risk by, say, investing heavily in the stock market or taking on a hefty mortgage to buy our first home. But even as we save and invest for the future, we should also aim to minimize potential subtractions from our wealth. Those subtractions might appear modest, like mutual fund expenses and stock trading costs, or they can be huge, such as selling shares at a market bottom or becoming disabled and yet not having disability insurance. Either way, there's the potential for great financial damage. Among some readers, the ideas expressed in the pages that follow will prompt gnashing of teeth and grumblings of dissent. From the reactions I have received to my columns in the Wall Street Journal and elsewhere, I know various ideas: that money doesn't always buy happiness, that you're highly unlikely to beat the market, that paying ahead on a mortgage often makes sense, that retirees should delay claiming Social Security, that a retirement built around relaxing probably won't be satisfying, are profoundly unpopular. But I hope you will keep an open mind.